So you guys haven't seen. Every time I go into the new office, we find new things like employee awards and plaques and stuff, and we keep putting them on Rob's desk in the new office. So he's what are you? Your employee of the year. You won outstanding display of corporate values. What else on your desk over there? You won 2 or 3 awards already.
I did. Yeah, employee of the year. Market district rep, something or other. Yeah, it's all good. All right, let me get to this stuff here. All right, guys, we're gonna get going. Okay. Hey guys, if we talk about loans or syndications or crowd fund or general partnership people, know that we're just discussing our business, what we do. It's not a solicitation. Solicitations happen by Brian from our office, so you'll know when you'll be solicited. He'll work through it. He'll set up a meeting. There'll be all that. So again, today we're just talking about some examples if they might come up. We do need your help. We're still looking for a few more reviews on Facebook. If you have 5 minutes, text 5 minutes to 281-401-9008. Would very, very much appreciate that. 281-401-9008. I'm going to go ahead and just tag that right here. 281-401-9008. There you go. We went over that tonight. I'll go over this at the back end of this afternoon. So if you want to stick around, we'll go through the Real Estate Investment Center. We are having our How to Raise Private Money tonight. About 11 or 12 of you signed up. If you're interested, reach out to Brian. You just text Brian to that 281-401-9008. I'll make the connection. So again, this is low-key, guys, people that are actually lending and doing some things. We're just going to kind of go through a couple steps that we would highly recommend you do. This Saturday, private money coaching, that is filling up. It's online. I'll send out the link in a little bit, but this is a good one if you're looking to work with private lenders. And you can kind of see what we're doing. We're meeting with private lenders on Thursday night. We meet with our private lenders and investors on Friday afternoon, and we're going to get good feedback from them. And then we can come to you on Saturday to go through it and say, hey, here's the deal. This is what these folks have given us the feedback on. So you're going to get 48-hour-old feedback from private lenders on what they're looking for in the post-corona marketplace. So this is a hell of a deal at a 147. We're going to throw in our JB docs, which are $600 from any attorney, our equity mortgage calculator, and 30-minute marketing consultation with Jason, myself, or Taylor, depending on what you need. We are promoting Ambit Energy. If you guys haven't seen that, Ambit Energy, save money on your electric bills, become a consultant. If you have Airbnbs, this makes a lot of sense. This is something you want to take a hard look at. We're getting folks to sign up right now. It's $100 to come in as a consultant with $25 every month for your website. So Jason and I are building this stuff out using our Airbnbs as accounts and growing through the network so that we can get free energy and make some money on the side. The mastermind, we're going to do something on Monday night for the mastermind. Jason, you might want to blast that out. We're going to do a mastermind preview. I'm really, really hoping that we can make an announcement Monday night for our new partner. But you guys, it will be a very strong candidate in our world. You guys know the mastermind. You've heard this before. It's $7,500 for year one, $5,000 year two, $2,500 year 3 and free thereafter. Need to make about 6 figures, 700 FICO score, and accessibility to capital. I think we're over 35 people now in our mastermind. You know, almost 30 of them are accredited investors. So, but that doesn't, as long as you have $100,000, you know, income, 700 general FICO, and the ability to deploy capital, you'll be good. What's going to happen though is when we bring our partner in, they need to get paid. So it's going to go up to $10,000 a year 1, 7,500 year 2, 5,000 year 3, 2,500 year 4, and free thereafter. So this is absolutely a sense of urgency sale. That's what's going on right now. This is my hard pitch, and hope that you'll join. We'll go over it on Monday, and as soon as we make that announcement, we have to go to the new price. This is the guy you're going to talk to if you want to be on the webinar tonight. If you have lent to us or you're thinking about lending to us, it's really important. We're having an investment update tomorrow. Live version starts at 2 in the afternoon. Could go, I don't know how long it goes, but hopefully you'll have some wine and some cocktails with you, and we can get through it. We're going to go through all our properties, all our funds, all our syndications, and just kind of lay out what's going on, what the market has happened, rental rates, things of that nature. So that is Brian. Reach out to Brian at 281-401-9008. Text invest. We'll make sure you get a hold of him, or you can just email him. All right, Jason, what do you got?
Okay, I'm over here doing all kinds of stuff. Let me close a couple of windows. Let's see here. Share screen. Okay, so I went and started doing a little research. This is all articles I'm actually just reading, but I want to talk just a little bit about Houston real estate and the oil market. Oil is a disaster. I read a fascinating article. In fact, let me see if it's still up on Zero Hedge. Give me like 2 seconds. Here we go. Oh, wait, no, we're going to talk about that in a minute. There was a great oil article. Just briefly, man, these articles are getting updated so fast that it's hard to keep up with. It may already be. You know what I noticed, Rob, just a little FYI, the Stanford study has already been retracted. So if you guys were listening to us yesterday, on the radio show, I talked about the Stanford study as it relates to coronavirus, and they've already retracted it. My guess is the VA study that was out a couple of days ago, they're going to end up retracting that. There's so much bad science out there. It's absolutely insane. So let me see if this is what I wanted to quote from. This just talks about buyers and sellers, that sort of thing. Let's talk about real estate real quick. So everyone believes that, or the common knowledge, if you will, conventional wisdom says that the oil prices in Houston, when there's a crash in oil prices, there's going to be a crash in real estate. And nothing could be further from the truth at this point. And we're going to go over some data today from a handful of sources that I pulled. Now, some of this is a little bit older. These articles would be from 14, 15, maybe even 17. However, the same rules apply, if you will. And you got to remember, there's been a handful of crashes, oil crashes, since 2008. So this isn't the first one. I think our last one was in 2015, if I'm not mistaken. So let's talk about some of the stuff here on this website. There's an 18-month lag between the 2007-08 financial crisis and a dip in Houston real estate prices. That's absolutely true. What's fascinating is let's see here. Homeowners who bought at the peak of the crisis, including transaction costs, were able to recoup their investment within 4 to 5 years. Those are not real estate investors. Those are retail investors. So keep that in mind, plus including their transaction costs. So your transaction costs are typically about 10% for a retail deal. There's title costs. There's other closing costs. There's the cost of the loan. That's usually about 10%. So a good way to characterize that statement is to say homeowners who bought at the very top of the peak, plus 10%, it took them 4 to 5 years to get their to essentially get back to even. This is absolutely true here. Any downturn, there is a flight to quality for in-demand neighborhoods. Good floor plans, not immediately located next to railways, highways, thoroughfares, that sort of thing, continue to hold their value. So good properties will hold their value much longer than others. I will give you a great example of that. A-Leaf and Pearland and certain parts of Spring were decimated in the last crisis, in part because of two reasons. One, there was a ton of inventory for new homes. In fact, Missouri City is another one. There was all this inventory of new homes. There were a bunch of people who got loans that should not have. And the second thing is the quality of the area. If you talk to any of the hard money lenders in town, ask them which houses they took back in the last crisis. And usually they'll smile and wink and say, ghetto properties. Like Sunnyside was decimated in the last housing downturn because it's just not a great area of town. Now, things have changed over the last 10 years, but those areas of town that were rough are the ones that take an absolute beating in those marketplaces. Certain areas of Houston are more exposed to energy jobs than others. So last night I was being interviewed for a show, the owner finance folks, and I said, look, the energy corridor is going to take a beating. They're already taking a beating from Harvey. This is another beating 3 years later. I had a couple of folks reach out to me yesterday that asked questions like, well, Jason, I just bought this house in the energy corridor. What do you think? And I said, I think you're about to get hammered. I mean, it's just, there's no other way to put it. Now, if you're interested in buying a property in Memorial all the way out to, let's say, Highway 6 and I-10 above $300,000, now's the time to buy it. Like I'm looking again in Memorial. I'm like, I want a 3-car garage. I want a pool. I want a 10,000 square foot lot and about a 3,000 square foot 1-story. I mean, that now's the time to be buying those. However, in areas near the medical center, Galleria, they could outperform all these other assets, which I think is absolutely going to be true. Just some of these submarkets are going to get absolutely hammered, and there's just nothing you can do about it. Houston is currently a strong seller's market, about 2.7 months of inventory. That's of the date of this article. I think we're at 3 and some change right now. We would need a reduction in 30 to 35% in demand to return to a balanced market, which is a collapse in demand. That's a crash. What's amazing is we return in appreciation about 3 to 5% per year in a balanced market. This is why I keep telling folks, I'm like, I am not worried about Houston at all. I'm just not. We need a collapse in real estate to get back to a normal market. I'm just not seeing it. And again, there's this flight to quality that's such a big issue here. This is pretty interesting. Houston is currently more exposed than any U.S. cities with regards to energy, which is absolutely true. Houston obviously is the energy capital of the world. At the time this article was written back in 2015, the reason this article was written in 2015 is because that's when the last oil crash was. So I'm just kind of giving you guys an update here on where we're at with regards to the energy sector. Now, this is where things get interesting. And this is why I actually grabbed this article, because I've not seen this anywhere else. This was as of 2015. Houston's energy exposure is down 70% since the 1980s. So we get a lot of folks in real estate who've been in Houston all their life or been here for 30, 40 years. And they'll say, Jason, you don't understand. I mean, in the 80s, it was a bloodbath. And I'm like, yeah, Bob, you don't understand. We now have the world's largest medical center. Like, this is a big market. It's grown a lot since the 80s. So the energy exposure for Houston is down 70%. Now, we still have a significant energy exposure. However, it's not nearly as severe as it was in the 80s. So hopefully you guys can get look at this. Houston's energy exposure is dramatically lower in the past. 85% of Houston's employed in 85 was directly or indirectly exposed to the energy sector. It is not like that anymore. fact, Houston's primary industries: retail, food and services, 24%, healthcare is 11, government's 13, and then of course we got education and real estate and some other stuff that's about 14%. Now, don't get me wrong; these jobs are going to be impacted, but we are going to have a massive retraction in oil and gas. There's just no other way around it. It's just not going to rebound as fast as everyone's thinking it's going to. All right, here's an updated article on the same website, which I think is great. This is a good information here. Watching recent closings is like looking through the rearview mirror. So there's going to be some differences, obviously, in this crash versus the one in the past. But again, I'm not calling a real estate crash. I'm just calling a recession here in the local economy. But I don't think we're going to see a whole lot of difference here going forward. Listings are down. In fact, let me show you guys. Let me give you guys some anecdotal stories here. I saw this morning. This got posted about 15 hours ago by this gal. I'm a member of this Facebook group, Houston COVID-19 Real Estate Discussions and Strategies. For the most part, it's retail real estate agents. And this gal said, I got 14 clients under contract in escrow, writing a full price offer for number 15. What's it like for everybody else? Evan says, amazing. We got 10 closings projected by the end of the month. May is looking a little bit weaker, but there's still plenty of time. And Jenna down here says 10 pending for me. And then Ozzy down here, he runs a brokerage, said, hey, I got 31 pending right now. And then he goes on to say, hey, I got some commercial stuff going on and a bunch of other things. So again, I'm not seeing a big weakening in the marketplace. This is new listings. Obviously, they're way down because no one's listing properties right now. I shouldn't say no one. It's just becoming a little bit more of a challenge because of the whole COVID stuff and the shutdown. New homes under contract. I'm going to talk a little about new homes a little bit later. New homes are an absolute bloodbath, and I'll explain why. Here's price reductions. Really not that. I expect things to be worse. Let me put it that way. Actually, the question we should be asking is, why aren't things worse? Which I think is interesting. This is real estate showings, and there's been an absolute collapse in real estate showings, and it looks like they're coming back. You know, we ought to be seeing showings, I mean, at almost zero. I thought everybody was freaking out. So it looks like showings are down, just eyeballing it there, 10%, 15%, 20%. They were as low as 50%. Now they're popping back up. So it's fascinating to see right now what is happening in the oil and gas markets. This is the Texas Real Estate Investing Center. I highly recommend, or the Texas Real Estate Center. Sorry, we are the Texas Real Estate Investing Center. This is out of Texas A&M. This is through Q1, which is through March, into March, and really not a whole lot happened in Texas with COVID. Now, a lot of these properties were put under contract the month before, so the Q2 numbers will be interesting to see. Where rent is most affordable. This came out April 22nd using the data by for the end of March. Probably the most poignant chart in here is percent growth rate. Houston, obviously, Houston Woodland Sugarland has been the most active at about 16% over the last couple of years. If you look at here, this is by MSA median monthly rent. Houston is fourth here, which is interesting, at about 18%. So things are looking Midland is at 30%. I expect that to absolutely collapse. That's all oil and gas, folks. Austin and Round Rock, Dallas, Fort Worth, I hear is slowing, but I don't expect Houston to slow down anytime soon. Falling drop in oil prices, a little bit more. An updated article again. Let's go back. I mean, there's 18-month lag. I think it was the same article we were looking at. Yeah. Oh, it's a little bit different. But I'm just not seeing, I'm looking at all the data, and I'm just not seeing an absolute collapse in real estate. This is very good for us. U.S. new home sales have never dropped this much ever in March. It's an absolute collapse in new home construction, which, again, I want to say, duh, that makes total sense because no one's out building new homes right now. Complete collapse. This is, and I've said this time and time again, in 5 years, you are going to see this on all the financial channels where all these really allegedly really smart people predicted the run up in single family house prices. And to this date, I'm the only one that keeps using this. In fact, I've never seen this on any presentation from any real estate guru, from any economist ever. And I think this is the most important chart in single family real estate. The green line is median new home sales price. The red line is median new home, new homes built. And they've tracked, it goes all the way back to 1990, and they've tracked pretty much right along with each other until the collapse in 2006. It's becoming more and more expensive every single day to build new homes. In fact, let's go back and look at this. This news article here says new home sales have collapsed, right? No shocker there. But here's what's fascinating. The median sales price from the prior year rose to $321,000. We can no longer build affordable homes in the United States anymore. And they're becoming more and more and more expensive. Supply is becoming constrained. And as supply is constrained and demand stays consistent or stagnant, prices will rise. That is absolutely what's happening. And as new home sales collapse, this median home price may stay the same, it may go up or may go down. However, those of you who are landlords, again, Rob and I talk about the real estate market with regards to cash flowing properties. We are not buying houses above $320,000. I can tell you that right now. So the place where all the pressure is, the pricing pressure, are houses below $300,000. They are moving extremely fast, and the numbers continue to rise. And if there are no more new homes on the market, meaning supply and listings are down, it's going to put more pressure on affordable homes, which are below $300,000. So guys, I'm going to tell you right now, and I say this on every single one of my emails. If you thought real estate is expensive now, just wait. Just wait. I probably should say, if you think real estate's expensive now, just wait. It is about to get painfully expensive. So
Jason, let me make my mind process this.
Okay.
So for us, our target is really 250 and below.
Yep.
Which is below the median price here in Houston. There's no housing starts. Those are drastically down. There hasn't been any housing starts really in that market for a while. I mean, I see a lot of starting at 229, which means they're really selling for 300, right?
Yeah.
There's not and those are townhouses or they're side by side stuff. So with a common wall and some shared roof and things like that. So that's down, which means supply is going to be down. Even if people do lose their job, they still need a place to live. So you're going to see if any pressure comes in this market, it's going to be downsizing. You're moving out of that 750 Memorial down to 300,000 somewhere else because you can, right?
Yep.
And that really puts us in a prime position because we focus around the $100,000 a door world. That's what we're working on when it comes to multi-units, and $150 to $180 per house when it comes, $180,000 a house when it comes to the single families we do. So that's what we're talking about. In our market space, clearly there's going to be some problems like you're mentioning in the Memorial. I want all the things that you want, Jason. I just want a gated community. So
there you go.
That's the one thing I would add on to that. But when we talk about it, so someone's saying, hey, Peter Schiff is saying this, someone's saying that. We're talking about Southeast Texas, under $250,000, under the median home price is what we're talking about. Already a housing shortage, no houses being built at that price point. And if people are getting laid off, they're downsizing, they're moving into rental units, and there's just not enough rental units, right? So which really led the recovery 2011, 2012 in Southern California, rental rates started going through the roof just based on supply and demand.
Yep.
And so we're in a good position for another 3 years or so, if there is what people are expecting to happen, because it's intuitive to say, hey, the oil companies are laying off people, which means the logistics folks are getting laid off, which means the bank folks are getting laid off, which means, it all rolls downhill, but not at our price point.
Right. Yeah. Our price point is, it's, the real estate market's going to collapse. I'm like, okay, but everybody's got to live somewhere. And we're the affordable house model. So you go, all of a sudden your budget was for a $500,000 house. And now you're shopping my houses in Bear Hill at $225.
Right. Our exposure in all this is we need to get the economy going back, because we employ a lot of $12 and $15 and $18 an hour workers inside our rental units. So they're the ones who are living there. Yeah. That's our exposure in this whole thing.
Yep. Yeah, look at this. This is 430, reduced 18%, been on the market 600 days, 3,300 square foot house on the west side of town. Oh, I didn't click pool. I was looking for a 3-car garage. I need to put a pool in. Let's take a look at this one. Yeah, we looked at this one the other. Oh, this was hard to. It's hard to see. They got a sweet pool back here. This house has been on the market for 2 years. I've looked at this one, I don't know how many times. There is so much opportunity. Let's pull this out. I mean, look at this. This is the Beltway and I-10. 449, 14,000 square foot lot. And this submarket is going to get hammered. It's just a matter of time. It's going to get absolutely hammered. Look, that's a beautiful house. It's already down 13% in 60 something days. Absolutely. What are we selling here at 479? Oh, that's a beautiful house. 2,800 square foot, 16,000 square foot lot. Yeah, these submarkets are just going to get obliterated. What a beautiful house. So get ready, guys. The Memorial is still going to be on sale. Still, oh, what is that? Man, that's nothing special. These folks are still going to be feeling the pain. They really are. It's going to be a mess. It's going to be an absolute mess. But, oh, look at this. 20,000 square foot lot. That's a half acre. That's a half acre. So with these folks, this is going to be I've looked at this one before. Yeah, this is a little mid-mod in need of some restoration. Yeah, 2,800 square foot house, 20,000 square foot lot. It's been on the market, how long? 27 days. Well, that's not true. Let's see. They started listing this thing January 7th, 2019. So it's been on the market for over a year now. And they've taken $100,000 off the price. Yeah, it's this submarket here is going to be in a lot of pain. If you guys want to pick up a pretty sweet house that's going to be worth a substantial amount of money in the future, man, look at this, 345. Is this a house or is this a 1-story, 4-bed in Nottingham? Are you kidding me? For 345 grand? That's a great deal. What a great deal. So there's going to be a lot more of these in this market. There's really nobody to buy them. A lot of this is the energy folks. 370. Whew. Jeez. Yeah, Rob, your flip was over here, right? In over here by Highway 6, and if I remember, yeah, these guys are just in for a world of hurt.
It was Cinco Ranch. It was down further.
Oh, okay. You were much further south. You were really in Katy.
Yeah.
299. Yeah, this is nuts. 299 is 3,200 square feet. It's under $100 a square foot. Now, I imagine this needs a rehab, but shoot, man. $50 a square foot. You're going to make this thing a dollhouse. Yeah, this looks like somebody bought it to flip it. and it didn't quite work out. And they're still holding on to it. Of course, it only says 73 days on market. But they originally, well, that was in 2019. They originally listed it, but they've held it for at least since Harvey, because that's Harvey flood damage. Now on 299. What we got here? So I would be, my advice to you guys is be extremely careful with flips. Look at this one. Here's one that's rehab for 299. I'd be extremely careful with flips in these submarkets. It is absolutely going to be a buyer's market. And it's been a buyer's market since Hurricane Harvey. It really has been. And it's not going to get any better. North I-10, those houses are less expensive. So I don't see that being much of an issue. This is all Bear Creek. You'll see that you'll immediately notice the difference in the number of properties that are pending. I mean, you just tell by the color, a third to almost half of these are pending, and that's at 240 results. If I go in here and I drop this is at 600. If I drop this to 3, let's call it 250, you'll see inventory evaporate. There's 240 houses. I mean, look how many, that's like 2/3 of them are pending. So below $300,000, it's like, it's a hot market. I mean, 100, let's see how fast these went pending. On the market, 3 days. On the market, 49 days. On the market, 10 days. 7 days. 3 days. This is below 200 grand. 18 days. This is all in the middle of the crisis. Here's another one. Let's do this. Let's look at everything below 200. I bet that number will blow your mind. Bang. Look at all those pendings. 5 days, 14. In fact, let me do this. Let's look at pendings. Won't let me select all of them, but let's just look at option pending. There's nothing crazy. 22 days, 18 days, 11 days, 160, 3, 7, 10, 49, 7, 83, 41, 12. What is that? 2/3 of them are less than 2 weeks. Let's just look at pendings. Let's go down the pending column. 5, 411. I don't know what that's all about. 10, 81, 18, 190, 27, 18, 3, 5, 140. That's a new build. 33, 118, 144, 61, 39, 316, 359. I don't know what the hell's going on. This may have been flooded. That may be what's 52, 2, 20, 1. That's a flash sale, by the way. 2. I mean, crazy. Just they're moving below $200,000. They're moving so fast. Even with an ugly green garage door. 4, 2, 7, 6, 75, 15, 18. I mean, they're just selling. So if you want to be a landlord, you better get to work now, because there's going to be no houses. There's just not going to be any left. Let's look at actives. What are the total for sale, lease, just actives? There's 84 actives. And by the way, just pendings, there were 60. So these are going to be gone in 2 weeks. They're going to absolutely be gone. In fact, most of you guys who are landlords are going to be under 150. 8. You have 8 houses to choose from. That's a cool looking house. You have 8 houses to choose from in this market of 60 something actives. So let's scroll out a little bit here. 27 houses between 99. If you guys, for those of y'all in Houston, know how big an area this is, between 99 and downtown, between 45 and 99, this whole pie area, you have 87 houses below 150 grand. 87, that's it. So if you're sitting around waiting for the crash, it's not coming for rental properties. Now, are you going to be able to pick up a sweet deal in the Heights? Yeah. You're going to be able to pick up a doubly sweet deal, Memorial? Absolutely. But you ain't building a portfolio with any measurable amount of wealth above $150,000. There are virtually no properties for sale below $150,000 in this city. Now this thing pegs out at 240 listings. So let's see. We're at 240 there. 240, but we're picking up some really ghetto areas of town. Let me see if I can change the filters to neighborhoods that have HOAs. Pool, patio, deck. No private pool. A lot of you landlords don't like pools, so we'll take that out. I ought to be doing this in Matrix because Matrix is a little bit easier. New construction, there shouldn't be any. Finance, garage. You're going to want at least a 1-car garage. Stories, year built. No, I think it's maybe in Matrix where I can pull up whether or not it has an HOA or not. But once you take HOAs out, because HOAs typically keep the neighborhoods pretty nice. So once you add at least a 1-car garage and no pool, you're at 159 houses for everything inside the belt. Let's see if we can go out a little bit further. That's 215 houses. And you're almost at 99 and in. Yeah, I had a house on Naughty Oaks. So if you're waiting for the crash, it's not coming. There's no crash, guys. No crash is coming. No crash is going to save you from building wealth with real estate. Crash is canceled. I actually had, in fact, if you really want to get, let me back up a little bit here. Let me see if I can draw my favorite markets here. Oh, will it not let me draw? Oh, okay, here we go. I should do all this stuff in Matrix. It's so much easier in Matrix. Let me pull up Matrix real quick. We got a little bit of time, and I ate a big breakfast, so let's do this. Let's go into Matrix here. Let's look at single family. We're going to look at everything below $150,000. We're going to look at just actives. What else did I want to look at, Rob? We want to make sure they've got HOA mandatory. Yes. We want mandatory. Look, we're already down to 419 houses in a market that has what, 30,000 current listings, 35,000. If somebody wants to pull those numbers for me. New construction, no, but there shouldn't be very many there. No private pool. We're down to 351 houses. Let's see how big an area this is. Yeah, this is practically the entire state. Let's move into Houston. Let's just do inside of 99. Let me draw here. Let me do some drawings. I want to go all the way down to 6. This is really the marketplace that Rob and I play in. Let's go back to, there's 147 houses. That's it. Like, this is the market we focus in on. And below $150,000 with no pool, mandatory HOA, so they're going to be good neighborhoods. There are only 147 out of, can somebody pull the total number of current listings right now? It's got to be in the 30,000 area. Let me see. Yeah, Peter Schiff said there's an oversupply of homes. Show me where the oversupply is. This is the market we play in. I don't play in $500,000 homes. Like, Rob and I are very aware, because Rob and I are going to build this travel club. Vegas and Miami and Fort Lauderdale are going to get hammered by this recession. But Houston, Texas, not seeing it. There's 147 active listings for a marketplace. And that's for you landlords out there. This is it. Out of 30,000 houses, you get to choose 147. That's it. That's all that's got a cash flow. Let's look at solds in the last 14 days that fit that criteria. 43. That's what's sold in the last 7 days. 30% of the market has sold in, 14 days. 30% of the market has sold in the last 14 days in the middle of the virus nonsense. Guys, there are no houses for you to buy. Like pretty soon here, we're going to be fighting over the table scraps. There's just nothing out there. In fact, let's look at how many are in HOAs. Let's include HOA and non-HOAs. This gets into some really rough areas of town. Let's say no here. It's calculating 60. So below $150,000, I've been beating this drum for 2.5 years now. You think real estate's expensive now? Just wait. There's going to be virtually no houses below 150 grand where you as landlords can go in and buy them. I want this. Let's do this here. Let's look at actives again, below 150 grand in an HOA. Those are typically going to be your good neighborhoods. This is it. I want that to be seared in your memory. If you think there's some big real estate crash coming, there isn't. No real estate. There is no real estate crash below $150,000. There's none. You know what I ought to do? Let me pull this up, Rob. Just to pound this point home, let's look at solds for the last year. No new construction, no private pool. These are landlord deals right here. Let's see how many they kick out for us. We have 2,200 solds for the last year below $150,000. This is a very big, this is that mapped area. So there's only 2,200 houses. By the way, we bought 100 this year. We're like 5% of this market, which makes us a pretty big player in the sub-market. But let's take a look at this. Let's take a look at the stats. My guess is the days on market are less than 90 days, which means they move pretty fast. In fact, you can see that right column right there. That's days on market. Again, this is properties below $150,000 in an HOA that have sold in the last year. There's 2,200 of them. The median list price is 139. List price sold price ratio 98%. Days on market, look at this. I couldn't even predicted that. Your median days on market is 11. The average is 25. That's absurd. If you guys are waiting around for the crash, there's no crash. It's not coming. This market is stupid hot. Average median days on market is 11 for $150,000 and below. I don't know how else to convince people. In fact, I'm to the point now that if you don't believe the data, you believe in magic. Like this is very clear here. This is your 3-2 brick house, 1,500 square feet, 99 outside of 90, or I should say inside of 99, which is the greater Houston market. 20 out of 2,200 houses that have sold. This is a very rich data set. And your days on market, your median days on market is 11 and the average is 25. If you're waiting for a crash, it's not coming. There's no way it's coming. So if you're not going to get into real estate right now as a landlord, if you're not going to get into Airbnb at this price point, you're not going to ever be in real estate. There's going to be no real estate to buy. Period. They're selling 2,200 of these things. They're selling what? 200 a month. That's really what this means, right? 2232 divided by 12 will tell you how many they're selling a month. 2232 divided by 12. They're selling 186 of these a month. Now, Keep in mind, there's only 147 listed, which means they're selling almost all of their inventory inside a month. Let's go back to let me pull up the HAR report. HAR report should still be up. Here we go. What's our, Rob, we might want to record just this last segment and send it back out on our email list for all the folks that are not getting it. Our market has an average of 3.5 months of inventory. We sell on average 187 houses below $150,000 a month. So let's take 147 divided by 186. That means we have 0.79 months of inventory. We have less than 1 month's worth of inventory for houses below $150,000. That is a white hot scorching market. In fact, I would argue that probably makes it the hottest submarket in the country. It has less than 1 month of inventory on the market. We would have to have a colossal collapse. Again, we can go back to the data. We can say, what's closed in the last, when did this stupid thing start, Rob? Was it March? I need to pull up a calendar.
March 11th is when we said it's starting.
Okay, so March 11th. So let's look at solds starting March 11th. I like to refer to this as
May. You're in May.
Oh, I'm May. Sorry. March 11th to that should just give it. Let's see if that doesn't throw us an error.
$188.
So we sold 188 houses in the middle of the coronas. There's no crash coming. That all sold between now and March 11th. If you're waiting for a crash, it's not coming. Like, you need to intellectually get over that. Like, this is a market that is defying the greater economy. Probably a better way to put it is, this is gold. This is gold right now. This is the spot price for gold. If you guys are not following the gold market, the gold exchange traded funds have decoupled from physical gold. Physical gold is worth more than the paper contracts because they can't fulfill the demand for physical gold. That is exactly what's going on here. We're selling just as many houses below 150 grand in the middle of lockdown 2020 as we were in 2019. Again, if you're waiting for something, it's going to pass you by so fast, your head is going to spin. So I don't know what to tell you, Rob. 0.8 months of inventory. That's all we got on the marketplace. I don't know how much we would need war with North Korea, an alien invasion, a credit crisis, another round of COVID 2020, and maybe we go back to 3 or 4 months of inventory on market. But it's just not stopping. Above $300,000, a whole different thing. I'm not seeing it here. I don't think there's any data that says this is stopping anytime soon. There's no crash, guys. If everybody's waiting for a crash, it ain't coming. No crash coming. Where can I get a list of all the subdivisions that have HOAs in Harris County? Richard, you can go to, all right, let me show you this. I don't know how, Rob, you want to hand that back over to me? I can show you where it's at, but I don't know how you get to it. So you can go up here to public records and pull up real lists. This will take a second. You can go through real list here and put together a custom search. I have not used this in a while, but you can go in here and create a custom search Give it a second. The internet's slow here in Yield, Norhill. Anyway, you can create. Here we go. Customize search. Give me 1 second. Let me see if there's one in here. If I can spot it real fast. You guys see one that says HOA? There should be one in here that says HOA. Listing, land use. They have changed this up a little bit. Usually you can search for it, but there is an HOA tab that you can hit in here somewhere and say yes or no, and then download all the data as an Excel file. Let me cancel this. Yeah, don't save. And then it'll download. You can download this as an Excel file. Let me just show you what the results look like. Let's do MLS. No, let's do my search here. Give me 1 second here, guys, so I can show you what. So let's say we're looking at all the houses in 77084. All right, so you can do a search, and then you can actually download this data, and then what you can do is group them by neighborhoods. But I would look at ones that have a mandatory HOA. Yeah, you're going to get a gazillion results. So all we're going to do is show the first 1,000, but you can download all of them. In any case, it'll give you all of these here. So if you add the HOA tab in here, then you could search by neighborhoods that just have HOAs. Then you can download the data and pull the neighborhoods out. But like I said, let's be real here. That's probably a better way to say this. Let's get real honest. Who gives a shit? What you really need to do is come over here, pull up all of the solds, just like we had here, pull these results, download all this. Let's see here. I got to select all of them. Download all this. We got all of them. Or is that just 1 through 20? No, I want all of them. Yeah, checked out of 188. Export. It'll take a second here. I would much rather do this. This is much easier because the reality is it doesn't really matter. You need to find the neighborhoods that have HOAs that are selling houses below, whatever, below $150,000. Now you can go in and change. You can change the data here when you download it. I always forget. Let's try this one. I always forget which one I want. I've done a couple of these different. Come on. There it goes. All right. Street name. Here it is. Subdivision. So I would just pull this data out. You can actually drop this into a pivot table. I do two things. One is I'd send this to a VA to clean up just to do subdivisions. And then I would drop it into a pivot table. And then I would go and mail all those houses using our service that we're a part of, Banner Season. If you guys want, I can put on a whole marketing. If you guys want me to put together a marketing class, I can put together a whole marketing class for, I don't know, it'd be a half a day, like $50 or something like that. And I can go through how to do all of this marketing stuff and then load all of it into Banner Season. If you guys are not familiar with Banner Season, this is the service that we use to send out our mail.
Yeah. Jason, do it in reverse. Anyone who signs up for Banner Season gets to come to the class.
Yeah, absolutely. Yeah, if you guys you sign up for Banner Season, hell, you want to sign up for Banner Season today? You want to drop that link in there, Rob? You guys sign up for Banner Season, I'll show you how the whole thing works. But I'll show you how it works in the context of real estate. So yeah, sign up for Banner Season. So Johnny says
anyone who signs up in the next week, we'll go ahead and schedule a class.
Yeah, I'll do a class next week. So if you guys sign up in the next week, I'll do a class next week on a couple of hours, show you how to pull down lists, and we'll do Banner Season. So yeah, sign up for it. It's Rob just dropped the link in there, but yeah, I can do a quick little marketing class for everybody. It's super easy. Like, it really is. If you're looking for those types of deals, Rob and I are talking about putting together a handful of lists for. I want one for a personal property. I want to put my name, and then B, we're taking over some neighborhoods. There's certain areas of town we really like, so I can show you guys our little mailing lists and what we're looking for. But yeah, it's not terribly hard. But if you guys sign up for Banner Season, we'll show you how to do all the marketing for it. How's that sound? That good for everybody?
Yeah, that's fair.
Okay. All right. That's all I got, Rob.
Yeah, I want to go over to the retail space here because people are coming in. I just want to make sure. So if you guys want to stick around another 10, 15 minutes, we'll do this. I've already done the disclaimer. I already did all that. This is the building. I'm actually in here right now. I'm in this office right here. And, we know who our people are. We've talked about this before. If you're an investor, you're typically have a good job. You're not looking to leave your job. Over 45 years old, you want some more properties, right? You like us because we shoot straight. If you're an entrepreneur, you're typically under 50 years old. You're all about the hustle. You want to outsource things as quickly as possible. You're ready to quit your day job as soon as possible, and you have no idea about a self-directed 401k. Those are the two, I'd say probably right down the line, 40% of the people that are following us, right? We've gone over this before. But here's the other part. I think about 25% of you are coming from the industry itself. And at first, you don't believe 50% of what we say. Then you have an aha moment, like what Jason just went through, because we're talking about there's not a crash, in relative to what we're doing. And then you watch Jason for 30 minutes go through HAR, and you're like, oh, snap, he's right. Those houses are not crashing. In fact, we'll see price increases there. You realize, guys, he's a genius. Certainly at this level, he's playing with the best. And then you either like him or you love him, or like him or hate him. There's really no middle ground with Jason. You either like him or you hate him. That's what it is. And then regardless of you like him or hate us, you want to do real estate deals with Mr. Texas Real Estate. You enjoy when we're in conflicts as long as it's not pointing at you. And then we have newbies, and I think there's probably about 15% of the people following us, Jason. This is the best guess. Talking to people at our events, they too don't believe 50% of what they say. They really don't like it when we tell them they have to have money to succeed. Because most beginners come into this world and are being told you don't have to have any money. And anyone who's been successful and knows this game knows that you do need money. So they don't like us when we tell them that. They don't like it when we call BS on gurus because they probably dropped $1,000 on some of these guys already. And really for them to come around and join the mastermind and do things, they kind of got to get beat up a little bit, which is a shame. Some of them get a little intimidated, and they're most likely to say, I wish I would have met you guys before I took this flip on, before I bought this thing, before I joined this group, right? And it's this group, the newbie group, that we're really underserving. And so we need to do better. And we're trying to build a community around it. You'll hear Jason and I talk about our real estate community over and over and over. This is really important for us. It's the whole point of owning this building and getting folks in here is to build a community. Here's what the space looks like. We got 29 offices available. 18 singles, 4 doubles, 5 suites, 2 anchors. We have another 6,000 square feet that's available. And I heard today this will probably be down to 4,000. We have a 100-person learning center. We have a cafe. We have a call center, 40 workstations, 3 conference rooms. And we have our media broadcast studio. But most importantly, we have foot traffic. The plan is to get people in and out of here. So I don't care there's very few clubs I would ever not allow in here, maybe 1 or 2, but everyone else is welcome, right? The millennial professionals, all those groups they can come here and meet. We're going to provide education for our real estate investors, continuing education for real estate professionals. We already have some title companies that have said they'll do their classes here. Weekend seminars, 2 of the weekends are already booked. Like 2 weekends solid every month are already booked. We have a radio show studio. What's really important, and what I used to see all the time in LA, especially through the crash, there'd be like one real estate office would host it, or the South Bay Real Estate Association would host a little Tuesday morning and be sponsored with free breakfast tacos. People would stand up and say, I have a deal, and I have this, and I have this, and I have this. And it would be packed. Like 200 agents and investors all sit in a room, and everyone just popping up saying, hey, I got a 3-bedroom, 2-bath down in Richmond. It's beat up. It's going to need some love. I do not think I should put it on the MLS. It'll sit out there. So If anyone's interested, let me know. We can do a quick close. We're going to build that here. Direct sales meeting, like the stuff for banner season and whatnot. We're talking to folks that run the farmers market. They'd like to do one night a week and maybe a Sunday, which is great. We have a huge parking lot. And then what we're really trying to do is a nice big block party for real estate folks. Once a month, very big. We're already talking to people about partnering up, but we have a temporary stage, some tents, some vendor tents, some food trucks. It should be a pretty exciting event for us here. We have a very large parking lot. Anyway, here's the building. So this is the first floor, and this is just half of the first floor. The other 6,000 square feet build to suit are back here. This is an anchor space. It's a guru here. Office, conference center, conference room here. Very large conference room, classroom. These are not built to scale, so don't think that this one is really small. It's as big as 118. All right. These are the singles. This is a double. This is a double, and these are the suites. The suites have got a front office and a back office. So 109, 108, and 107 are spoken for. We only have 3 suites left. This is the upstairs. This is the deal center. This is the education space. So when they come through the building, they're going to come through the front door, walk to the back here, walk up these stairs, and get into the deal center. That will be the in, and that will be the way out. So they'll get the foot traffic by everyone's office. This office is spoken for, and this office is already spoken for. Nice conference room. There's the call center. You can go in here. It's very quiet, double insulated. You get in here. You can make your phone calls. It's the meeting room. This is the education space. We're adding bathrooms so we can accommodate more folks. And then all this room here will get filmed in with workstations, beverage center, that type of thing. All be right here. The hours of operation are Monday through Thursday, 8 to 9. Friday, 8 to 5. Saturday, 9 to 4. And then Sunday will be shut down. We'll have an on-site receptionist for everyone. Conference rooms, call center, beverages, on-site cafe. You'll have discount meals, Wi-Fi, mailbox, company display. There'll be e-display, lead collection devices, exclusive networking events, just the tenants, education sessions, company displays in the window, free furniture, as long as it lasts. Display vendors, you'll have your all the folks who are here and your vendors. You'll get a display inside the main classroom, so there'll be people to take out your brochures and business card. Gated parking, monthly deal exchange, virtual deal board, online room reservation, so you can just book the room from home if you have a meeting, discounted business services, and a weekday fitness training program. Here's what it looks like. Singles about 140 square feet, doubles 250, suites 320. The anchors are 800 and 1,000. There's actually 2,000. So, we've got desks and chairs. We've got a ton of them. We're happy to share those with you guys, so they'll be in the room. They're all decent grade. Here's what we're going at. So the singles, which are, again, 140 square feet, which are about 40 square feet larger than the Regis building right up the road, and the other building right down the road that rents to real estate folks. These are bigger, and it's $565 to $600 a month. The $600 a month is the ones outside the deal center. The $565 is on the first floor. They only have 14 left. The doubles are $650 to $700. Again, if you're near the deal center, it's $700. If you're down below, it's $650. We only have 4 left. The suites are $850. We only have 3 left. The anchor spaces are gone. So right now we have 9 of the 30 spaces rented, almost a third. We have a premium package, premium furniture, accent wall, paint it, shelves, art, bi-weekly office cleaning, black and white printer copier. And here's a big thing, guys, for those of you still left. For this package, you're going to get a 60-minute podcast. You'll be able to record a 60-minute podcast in our studio. And we'll host the podcast on the Texas Real Estate Radio Network, which is absolutely booming. Tens of thousands of downloads. And we'll break 100,000 pretty shortly here. We just put up a whole new bunch. Also, if you do the premium package, you can host a 30-minute education session at least once a month. Maximum once a month. Now, there's a secret little council that Jason runs. He doesn't really advertise it, but he has been is running a marketing council called the Houston Marketing Council. It's not just for real estate. It's for small businesses as well as real estate. And, that's an hour every month. So you're going to get access to that. That is, group coaching, if you will, with Jason, 1 hour every month. VIP block party passes and phones. If you buy the suite, we'll give you 2 phones. We have an incubator space for those guys who are, hey, I'm a wholesaler, I'm hustling. I don't have $600, $800 to drop on an office, but I like to be in the center because there's going to be deals there. I represent buyers. Incubator space. Same thing. You get the receptionist, the workspace. You get access to floating offices. So there's open office. You want to book it for the morning. You need a place just to sit down and work in a quiet space. Just go onto the reservation system, book it. Access to conference rooms, on-site cafe, Wi-Fi. You get a mailing address, right? So you'll have a physical mailing address where your business can mail to you. You don't need a P.O. box anymore. You can use this as a physical mailing address. On-site parking. It's really big in LA. It's not too big out here, but anyway, on-site parking. You have access to the call center. It's a very quiet space. There's cubicles in there. There's a phone. You can get in there and dial for dollars. You have beverages, discount meals, exclusive networking events, education sessions, monthly deal exchange, virtual deal board, online room reservation. Discounted business services. Now you can come in, use an office space, use the workstation, use the conference room, use the call center. We know what our competitors charge. We're competitively priced. Again, 8 to 9, Monday through Friday, 8 to 5 on Friday, Monday through Thursday, 8 to 9, Friday, 8 to 5, Saturday, 9 to 4, Sunday we're shut down. It's $225 per month. Just want to go on a monthly basis. If you want to do quarterly, $625, biannually, $1,100, and annually, $1,900. We're doing a 2x multiplier. So there's 40 workstations, so we're only taking 80 people. If we expand out and add another 20, then obviously we'll take another 40 people. But these are people who are going to have their mailing address here, be a part of the group, be a part of the foot traffic, be able to attend all the events, go to the exclusive networking events. Again, we're having in-building networking. These aren't meetups open to everyone. They're in the building. Right now, I can tell you there's 2 commercial brokers here. There's signed up 2 lenders, but there's 3 or 4 more on a waiting list. There's a lawyer, there's a contractor, there's a real estate group that's buying and selling and doing owner financing. We'll probably get the owner financing company in. There's a lot of people that you're going to want to network with just being by the incubator space, and that's going to be $225 a month, or if you sign up for an annual rate, it's $1,900. That's it. We have a founders club. It's $27.5. You're going to get lifetime access. You get VIP for the block parties forever. VIP. This will be fun. Parking, 2 tickets to all the paid Mr. Texas Real Estate, 2 mastermind weekends, prominent lobby display, and it's a loan. So we're looking for a loan, and if you give us a loan, we'll probably pay it back. It's a 3 to 5 year term, and then as a kicker, we'll profit share. So we'll do profit sharing on the Texas Real Estate Investment Center. That's the Founders Club. If you're looking at a Founders Club, reach out to Brian, 281-401-9008. If you're looking to rent any of the space, you can go right to the website. I'll show it to you. If you just go right here and you fill out this application, tell us what you're looking for, office, 2-person suite. Right now, we're just working with people who are buying the offices. We'll get to the incubator membership. If you just fill this out, send it over. We'll have our leasing agent reach out to you. All right, Jason, that's all I had. Thank you guys a lot. I appreciate you guys sticking with us. We went a little long today, but thank you very much. Don't forget, if you're interested in Jason showing you how to do the marketing for postcard marketing, which is you get unlimited postcards through banner season. Sign up for banner season. Sign up as in well, let's go right to the site.
Yeah, pull it up, Rob.
You go right here. Let me just go. Yeah, sign up. You go gold. It's $49 a month. They're going to waive the setup fee, and just click here that you want to join the affiliate program. That's an extra $49 of free a year, but you get the first year for free. So all you're going to get right now is pay is $49. That's it. And it's $49 a month. Let me show you what the gold package gets. You get to use their CRM. You get to set up a CRM campaign. You get to set up a touch campaign with gifts, personalized gifts, real tracking, text to mailbox service, which is amazing. Just text our girl Sloan and you get in there. 50 cents a greeting card. You want to send a thank you card, it's 50 cents plus postage. You can print as many postcards as you want. You just pay for the postage. For $49 a month. Anything in the design store is 30% off, and all other gifts are 25% off. And our coasters came already, Jason.
Oh, great.
Yeah. So there's you go sign up, and then Jason will handle. We'll get you some marketing training. It's a no-brainer. We'll push that all week long, and we'll probably do it at the end of next week. All right, guys. Thank you very much for attending today. Appreciate it. If you're watching on Facebook, some likes and loves would be great. Take care.